Okay, hello everyone, it's Jefford again from Rubik's Academy. Okay, so today we are actually looking at we're looking at this indicator called the Parabolic SAR. Alright, Parabolic SAR. Okay, now this particular indicator is also very simple to use. So this will be another very short video per se, but perhaps just let me explain to you a little bit on how this indicator works. Okay, let me just explain to you. Okay, so basically you are gonna see like candlesticks on the chart. Okay, you will see candlesticks on the chart. Okay, it could be going up, it could be coming down. Okay, now what the parabolic SAR does is that it tries to signal a reversal, and it tries to give you an entry for a trend reversal. Alright, so for example, when it's going up, the dot will appear at the bottom of the candlestick. When it's coming down, it will appear on top of the candlestick. Now the problem with just using this as a trading methodology is that you are going to definitely, almost certainly, you're gonna lose almost 60% of the time. Okay, because it's very difficult to base on this alone to determine whether the trend is going to reverse or not. Okay, it is not accurate enough. Alright, so usually what we do for trading is this. We will pair up the parabolic SAR. This is how you spell it. Alright, with a moving average strategy. Alright, we'll pair up the parabolic SAR with a moving average strategy. So the general, or perhaps the most common way to use a moving average is to look for crossovers. Right? If you don't understand what I'm talking about, refer to the video on GMMA, the Guppy multiple moving average. Alright, I go deep into moving averages there. Now for the purposes of today's lesson, I'm not going to repeat the content again because you can just rewatch it on YouTube if you need to. Alright, but we are going to pair these two together so that when we enter based on this, it is much more accurate. Okay, your percentage of losing from 60% can be cut short to maybe say 40%. Okay, so you can win at least most of the time. Alright, as long as you keep your entry positions constant. Alright, you don't vary your entry position, you should be looking at an overall net profiting portfolio over maybe 6 months to a year. Alright, there will be some months that you will be down, there will be some months that will be up, but over the course of 6 months to a year, you should be looking at a profiting portfolio. Alright, whether it profits a lot or not depends on market conditions. Now remember that this is ultimately a trend reversal strategy. Alright, this is not a trend continuation strategy, this is a trend reversal strategy. You're trying to capture a change in tone of the market. Okay, so obviously if it's a very trending market, this strategy is not going to work so well. But if it's a market that is sideways, meaning that it doesn't go up or it doesn't come down in a very extended manner, then yes, this strategy will work pretty well. Okay, now without further ado, let's go straight to the charts. Okay, so again, I'm at this particular pair. Alright, what you want to do is you want to click on this. Sorry, wrong one, this. Okay, and you want to search for just SAR. Alright, you're going to see it right here. Alright, choose the first one. Alright, you will see the dots. Okay, it's very obvious and it's very easy to spot. Okay, if you feel that the dots are a bit too thin, you can click on settings. You can actually change the color. Alright, the opacity, you can make it thicker if you want to, make it less thick. Alright, I wouldn't suggest the thickest, I would suggest either this or this. Okay, usually I use this. Alright, So maybe you can change the color to yellow. All right, so whatever it is, it's done. Okay, so usually by right, the way to do it is that when the first dot appears on the other side, you start to go long. All right, like for example, if it comes from here to here and it's basically, sorry, all right, it comes from here, this dot, and it appears on the other side, that's when you start to go long. All right, when it appears on the other side, you start to go short. Okay, now this looks very easy to use, it looks very, very powerful, but again, this indicator is a bit like fractals. The dot, the cross could appear here for one moment and disappear to the other side. So it works in the same way as fractals. For those of you who watched the fractals episode, watching this episode, you will observe that the parabolic SAR works in the same way. Okay, now, so how do I make this more accurate? The way to make this more accurate is to pair it with maybe the GWMA. Okay, so you pair it with this. So let's go to a higher time frame. I don't recommend you use this strategy on a low time frame. Use it on a higher time frame, like maybe say a 4 hours time frame. Okay, all right, so you can see that the way this works is that when you see the green lines cross over from above to below the red lines, it signals a change in the trend. Okay, and you can see that even before it starts to cross under, the parabolic SAR already appears on top. Okay, so in other words, the parabolic SAR is what we call a predictive indicator, whereas the moving average is mostly what we call a coincident or a lagging indicator. Okay, it's a lagging indicator because usually it only crossovers after the trend is well established. So what you can do is that you can look at the green lines to see whether it's starting to cross over and combine it with the signal that the parabolic SAR is giving, so that you have a more accurate entry position. All right. Now, the dangerous thing about this strategy is that you cannot set a stop loss because you don't know, you do not know when it will reverse. You do not know when it will reverse back. So if you want to use this strategy, you need to have very, very tight control over your positions. You don't want to be actually over risking it. You need to keep your positions very, 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 very constant and very, very disciplined. All right. Okay, so that's it for this lesson. If you have no idea what these lines are, go to the moving average episode. I will explain more about that there. That was in a previous episode. Okay, thank you very much. My name is Jeffet from Rubik's Academy. All right, download our mobile app. If you want to know more about all this content, you can buy the full course on Udemy. All right, thank you very much. My name is Jeffet from Rubik's Academy. See you in the next episode. All right, thank you.